Welcome back to Retirement Today. Thanks for joining us. I'm your co-host, Jonathan Berkman. With me here in the studio is Michael Reese, certified financial planning professional for over 25 years now. And Mike, we've been talking a little bit about the housing markets and what's going on there and how that's sort of a leading indicator of perhaps a recession on the horizon, right? And out there's some solutions. We have our own, right, that we think we could be helpful to you with, but Wall Street also has some of their own thoughts and opinions. You alluded to that a little bit. I'm kind of curious what you've got for us there.
Oh my gosh. Wall Street, of course, has their idea of what a solution might be. And by the way, what I'm about to read you is exactly how people get in trouble. This is exactly how you get in trouble, especially during a recession. It's following advice like what I'm about to share with you. Here, before I do that, let's think about this out loud, right?
All right.
I put some notes here. I want to make sure I get this down right. So I shouldn't say most, I know that many people in the financial industry, many economists, just a lot of people have a strong belief. They'd say that the probability of a recession coming is pretty high. In fact, technically, we're in one now. Although, of course, in the White House, they don't want us. No, it's not really a recession. We're going to change the definition of recession, so it's not a recession. No, it's a recession. But it's a mild one so far. But I think a lot of us can agree there's probably a more substantial recession coming in the near future.
This is one of those hope for the best, but plan for the worst situations.
That's right. You got to plan for the worst. Now, let's say that there is a recession.
Mm-hmm.
Now, history tells us during recessions that there are certain types of stocks that tend to hold up better than others, right? So, for example, what does not do well in a recession? How about this? Small companies you've never heard of, and it really doesn't matter how much money they make. If you never heard of them, people are selling everything. They're certainly going to sell a company they've never heard of, right? It doesn't matter how... it doesn't matter what the business model is or anything. They're just like, oh, I've never heard of them. Get rid of them.
Yeah.
During recession, we're scared. We want comfort.
Mm-hmm. And
comfort is, if we're going to invest in a company, it's investing in a company that we know. Like if you tell me, Mike, do you want to invest in Home Depot or Larry's Lumberyard?
Right.
I'm going with Home Depot in a recession.
Fair enough.
If times are good, I might give Larry's Lumberyard a shot.
Yeah.
But Home Depot, I'm pretty sure is going to be there after the recession's over.
Exactly.
Right? They're probably going to still be around. I don't know about Larry. You know what I mean? So what does not work well? Companies that we've never heard of. Growth companies. Companies that, like growth companies are companies that they're usually tech companies.
Mm-hmm.
But honestly, they're not making money yet. They're burning through cash. They're losing money. If it weren't for more investors, they'd run out of money and they'd fail. And like a growth company their hope is, let's get a whole bunch of people using our product, then we're going to sell it to like a big company, right?
Yep.
Growth companies would be an example of things that do not do well in recession. But there are some types of companies that we know tend to do well. So, number one, large companies that we've heard of. Like if I've heard of it and I know who it is, like Coca-Cola. Is Coca-Cola going anywhere?
Probably not.
No, I mean they'll be around after the recession. So I'm gonna have a better sense of comfort investing in that company. And if as investors we have more comfort investing in that company, then likely we're more willing to invest so their stock price holds a little better. Mm-hmm. It may still go down, but not as bad. Or, Exxon Mobil. I mean, they're not going anywhere, right?
Yep.
Large companies we know. Second, especially if they pay dividends.
Yes.
If you have a big company like Exxon Mobil paying dividends,
mm-hmm.
and their dividends, they're making money, they can pay those dividends even during recession.
Yep. Hey,
I feel better. This investment I have is actually paying me something. The stock price might be down a little bit, but hey, I'm getting dividends, so that offsets that a bit. And clearly, they're more financially stable. Big insurance companies are examples of this too. Mm-hmm. Utilities. Big utilities tend to do well.
Yeah.
Why? Because we all still need our air conditioning and heating, right? I mean, it's like we all need our electricity.
Yep.
They do well, right? So who does well? Big companies that pay dividends, insurance companies, boring industry, oil companies, utilities, stuff like that. We know that does well because history says. Now, does that mean they're guaranteed to make money? Of course not. It just means during recession they tend to do better. Mm-hmm. Okay. With that as a backdrop, let's read the wisdom of Wall Street.
Okay.
From CNBC. And here we go. Here's the headline. Top Wall Street analysts. So these are the best that Wall Street has to offer.
All right.
Now remember, Wall Street is not in the business of protecting your money. They're in the business of selling risk. Mm-hmm. That's where they make money. It has nothing to do with protecting you. But here we go. Top Wall Street analysts name the best stocks to ride a market down cycle. Oh, this is interesting. I would expect to see what? Large companies, dividend-paying companies,
right.
Maybe insurance, utilities, stuff like that. Well, let's see what these analysts think. Let's see here. Right out of the gate, their first company name that they think you should invest in to ride out the upcoming recession. GXO Logistics. You ever hear of them?
No, drawing a blank.
Me either. Company I've never heard of, small company. Guaranteed, if you've never heard of them, investors are going to run away in a recession. Why? Because they're scared, they want comfort, they're not going to be putting their money in that. Okay, next one. Nova.
Nova. Sounds exciting. I don't know.
Is that a Carl Sagan program on PBS? No, Nova. Again, never heard of them. Another small cap, right? Another, give me a break. It's like, I want to lose my money, I'm going to follow this advice. Okay, here we go. Here's going to be a winner for sure. TD Synex. Yeah.
Yeah, I didn't quite catch that.
And this is the stuff that's out if you follow the advice of investing here, you're in trouble.
Goodness.
And then the last two companies, finally, we get to somebody I've heard of. Alphabet.
Alphabet, yeah.
Okay, by the way, for those of you that don't know who Alphabet is, that's Google.
Yeah.
Now, Google, big company.
Sort of big, yeah.
They make money. That's probably a little better, right? They're not really a tech company. I mean, they kind of are, but they're not. They're really an advertising company is what they really are. But, okay, that one's a little better. And then the last one is one that I finally can say, finally they gave me one that I can agree with. Edison International. What is Edison? It's a big old utility. It's like, yeah, okay, that one I'll buy. But of the 5 companies, 3 of them I've never heard of. What's going to happen there?
Not good science, right?
Yeah, this is why you don't want to listen to Wall Street advice. All right, here's something else. This is really important. Now, take a listen. If you have a financial advisor that you work with, or if you manage your own money, to what degree have you been exiting market positions and moving to cash this year? The markets are going down. You pay a financial advisor to manage your money. Part of managing your money is managing your risk. Mm-hmm. To what degree are they moving out of the markets into cash? And if they're not doing that right now, I got to ask the question, why aren't they doing it? If you're not doing it, why aren't you doing it? If you're investing on your own and you're not doing it, why aren't you doing it? Because when the markets go down, you got to get out of the way. You don't just sit there and take it. It's like, oh, look, it's pouring rain. I'm not going to keep going 85 miles an hour on the highway.
That's right.
Right?
Slow down a little.
Yeah. Got to slow down, right? Driving's a little more riskier in rain. Mm-hmm. Well, guess what? Investing's a little more riskier when the markets are going down.
Yep.
So, key point, if you haven't had that happening in your portfolio, maybe it's time to visit us for a Retire Right report. Right? Yeah. In a Retire Right report, what are we doing? The RIGHT is an acronym: risk, income, growth, healthcare, taxes. Mm-hmm. And part of investing is growth.
That's right.
What's the other part of investing?
Risk.
Yeah, risk and return.
Yeah.
I don't think we pay enough attention to the risk side of that equation. Successful investing happens when you risk little, but you have large growth potential. And for many people, they're finding like this year, they're like, holy cow, I never thought I could lose that much money before in my portfolio.
Right, right.
You're looking at your portfolio numbers, you're like, what the heck is going on here?
Yes. Yeah.
Well, if you feel that way, then you need to call us. And you need to get this report put together for you. We want to make sure you're on the right track with your retirement. Retirement should be enjoying the fruits of your labor.
Mm-hmm.
It should be a happy time. But it's not going to be a happy time if you're always worried about your money, because it's not invested the right way. Maybe you're not managing your risk the way you should. Let's get that free report put together for you, and we're offering it for the first 10 callers who've saved at least $200,000 for their retirement. So, Jonathan, how do our listeners get that free, no obligation, easy as pie, simple to do report?
Right. Get your peace of mind. Exactly. Reach out to us, 512-886-5850. Again, that number to call is 512-886-5850. Connect with us. It's after hours, so they'll get your name, number, and set up a time to connect with me. We'll dive into your situation a little bit deeper, learn more about you, and get you on the path to getting that Retire Right report. It's important, right?
Yeah, this is so important. I mean, listen, we like to have a lot of fun on the show.
We do, yeah.
But the bottom line is, with storm clouds coming, it's so important you get your ducks in a row. You got to get this done now. All right, 512-886-5850. Give us a call now. Now, don't go anywhere. On the other side, we're going to find out whether or not Roth IRAs are evil.
Ah.
We'll be right back.